Well, hello, everyone. My name is Joan Pugh. I'm with First Financial Federal Credit Union, and I welcome you to our Wellness First Wednesday presentation, our webinar presentation today. Thank you so much for being with us, and we hope that you find the experience to be helpful and knowledge-based and enjoyable. So today's topic is your credit score, the good, the bad, and how to make it better. And I'm going to introduce Allison in just a minute, as she is our presenter today, our expert. So with no further ado, I'm going to welcome Allison Mckechnie. She's the leading trainer here at First Financial. Welcome, Allison.
Hi, Joan. Thank you.
So glad to have you. I'm going to let you introduce yourself and then go right into your presentation. So Allison, again, thank you for being here with us and welcome.
Thank you. I'm very pleased to be here today. As Joan said, my name is Allison, and I am the lending trainer here at First Financial. Just to let you know a little bit about my professional background, I originally started off on a pretty different career path. I used to teach high school English. About 5 years ago, I crossed over into corporate training, and I've been happy to call First Financial my home since 2019. Teaching and training have always been a passion of mine. Oddly enough, so have credit scores, which is really weird to say out loud, and why I was so thrilled when Joan asked me to speak today. You see, growing up, my parents struggled financially and eventually declared bankruptcy. From that point forward, we were always told no. No, we can't have that car. No, we can't get that apartment. And I don't know about you, but I really hate being told no and that I can't do something. So as I grew older and left the house, keeping good credit by paying my bills on time was always a focus. I'm proud to say that I just refinanced my car last month, and I was able to get the best interest rate because of my excellent credit score. So go me. Okay, next. All that being said, I know what it is like to be limited by poor credit. I know the feeling of being trapped by your debt and feeling that there is no way out. But I'm here to tell you that there is. There is a way out. There's always hope. Today, I'm going to share with you plenty of tools, resources, and small steps you can start making to improve your credit score. As Joan said, at the end of this, she will be providing links in the chat to many of these tools and resources. So you can copy and save the links for later, or maybe share with a loved one if you know someone struggling with poor credit. Next. So the first question I would like to ask is, why are we even talking about credit scores? Well, as I shared in my introduction, credit scores can affect all areas of your life, from getting hired, applying for a cell phone contract, to renting an apartment. Bad credit really limits your options. Next. Let's begin by making sure we know what your credit score means and how that relates to your credit report. So your credit score is a 3-digit number based on your credit history. This number, which is from a mathematical formula, shows the likelihood a person will default, which is go 90 days past due on a loan payment. Now, what is the difference between your credit score versus your credit report? The credit report is credit-related information and history a credit reporting company has gathered from different sources. This can include mortgage payments, credit card balances, credit inquiries, and basically a lot of your other credit information. So in summary, next. Your credit score is calculated from the information listed on your credit report. Next. If any of you have done any rate shopping, which is basically going around to different financial institutions and seeing what their interest rates are, seeing what interest rates they can give you on loans, then you may have noticed that different financial institutions have slightly different credit scores for you. They vary slightly because different companies calculate credit scores using slightly different formulas. The big 3 credit reporting companies are Experian, Equifax, and TransUnion. And all three of those use the same calculation called Vantage score. Next, let's go back. Yeah, that's good. Yep, thank you. Let's dig a little deeper into our credit scores. Credit scores can range from 300 to 850. 61% of Americans have a fair Vantage credit score or better. So that's 61% have a score of 601 or higher, which is good. But that also means that 39% of Americans have a poor or very poor credit score. So that's anywhere from 300 to 600, which is upsetting, but I'm telling you, there is hope. You can change that. Next. Your credit score is based on 5 categories from your credit report. Some are weighed more heavily than others. The highest impact on your credit score is your payment history at 40%. Do you pay your loans on time or your bills on time? At 23% is your credit usage. This is the ratio between the total balance you owe and your total credit limit. The catch here is that sometimes closing credit card accounts hurts your score because it shrinks your total credit limit. For example, say I have a $1,000 balance in credit card debt, and I have a total of 2 credit cards, each having a $5,000 limit. So I owe $1,000 in credit cards, but my total credit card limit is $10,000. Now, just say one of these cards is Old Navy. I don't shop there anymore. My kids hate their clothes. So now I close one of the credit cards. So now I still have a balance of $1,000, but only a $5,000 credit limit. So in hindsight, I shouldn't have closed the Old Navy card because that decreases my credit limit to the credit balance ratio. Okay, next. Other things weighed for your credit score are your credit age. The longer your credit history, the better. The mix of credit is 11%. How many total accounts do you have? What types of credit are they? And 5% of your credit score is based on your recent credit. Have you opened multiple credit accounts in a short period of time? Lenders look at that because they consider that a higher risk. Next. So credit reports can include any of the following: public records such as tax liens, your mortgage payments, credit card balances, limits, and payments, auto loan payments, credit inquiries, and total loan amounts. For any type of loan information, it can also include the number of payments 30, 60, or 90 days past due. That is why it's so important that your credit report is accurate. Next. Since your credit score is calculated from what is on your credit report, it is very important your credit report is accurate. If you find incorrect information on your credit report, contact either the company that issued your account or the credit reporting company that issues the report. 1 in 5 credit reports have errors. For example, this is a weird thing that happened to me once. At one time in my life, my credit report had a BGE account in collections. I always pay my bills on time. Well, after further research with BG&E, it turns out one of my college roommates gave the wrong address to BG&E. So according to BG&E, I lived at a completely different address and had a completely different account I never actually even knew about. So they were sending all the bills to this address, all the collection notices to the address. And I had no idea until 3 years later, I had a credit report ran and looked at it and found that account in collections. So that's why it's important. And also maybe you'll notice if someone's been trying to hack your account, if someone's has opened other accounts in your name. So it's really important to check your credit report. And you are entitled to 1 free credit report a year at www.annualcreditreport.com. And I'm also going to share some tools later in this presentation that show you how different ways you can check your credit report. Next. Now we know about credit scores. We know how they are calculated, but why are they so important? As I said earlier, your credit score indicates the likelihood you will default on a loan payment. Financial institutions use this number and information from your credit report as part of their decision-making process. So your credit score and report impacts the loan decision. Are you approved for this credit card or not? Are you able to get this auto loan or not? And then even once you're approved, credit score can determine the amount of interest you pay. If you have a lower credit score, remember that means that you have an increased likelihood of going in default on a loan. So that's a higher risk to the lending institution. So they're going to charge you more credit or more interest, excuse me. Whereas if you have a higher credit score, you're a lower risk to the lending institution. So they charge you less interest. On the next slide, I have an example. Here's an example of the advantages of higher credit scores. We have two people who need a personal loan for $5,000. On the first line, we have Sally Smith, who has a credit score of 720. She has great credit, and she needs a personal loan for her twin's daughter's birthday. On the second line, we have Jim Jones. He needs $5,000 for car repairs. All of his credit cards are maxed out, and he has a pretty bad credit history due to unemployment in his past. His credit score is 610. So we have the same loan, $5,000, same term, 4 years. And if you look at the interest rates, Sally with a higher credit is going to pay an interest rate of 9.65%. Jim, with his lower credit score, is going to pay almost double the interest. So the monthly payment, Jim's will be higher by about $20. But then if you look, Sally is only going to pay about $1,000 in interest for the life of the loan. Jim, because of his lower credit score and higher interest rate, almost pays double that. He's going to pay an extra $1,000 over the life of the loan. This always bothered me about credit scores. To the Jims of the world, that extra $1,000 they pay in interest doesn't really help them get ahead in any way. That's why I feel it is so valuable to have knowledge, resources, and tools to improve your credit score. I will share those with you in a moment. Before I do you have any questions?
All right, Allison, that is a lot of really great information. And I am going to remind folks that we are going to be putting links and resources into the chat at the end as we finish up that people can access. I'm going to encourage folks as they have questions to type them into the chat now. But while we're waiting for that, I'm going to give you a couple of questions that we got already. Let's see. If I have good credit and my husband has terrible credit, will his bad history hurt me?
Well, that's a great question, Joan. It it depends on, I guess, what you're trying to do. If he signs on as a co-borrower to your loan, his credit history will affect you. So, you have a couple of different options with that. You could just take the loan out in your name. You could see the difference whether he signed on as a co-borrower or not. The great thing about First Financial is a lot of our originators can help talk you through this. They can show you the different options, the different rates you'll pay, the different payments you'll have, depending on the scenario. The great thing about First Financial is that it's a fiduciary, which, did I say that right? Because I say it wrong every time.
You did.
All right.
We're a fiduciary, absolutely.
And so, anyone you talk to about your loan options is working in the best interest of you. We're not trying to make money off of it. We're not a for-profit bank. We are trying to help you achieve your goals. So, if you're having questions like that, it's always great to call and ask and see the different scenarios and what the different payments would be, depending on who's signing and who isn't signing the loan.
Right. And I'm so glad you mentioned the fact that First Financial is a fiduciary, because I always tell folks when I speak to them that by culture and by creation, we put our member first. So we're not looking to profit or benefit the credit union on the backs of our member. And not every financial institution can say that. So I think that's pretty cool. So that's great. Okay, let's go to our next question. My son has asked me to co-sign on a loan with him. Will that affect my credit? Is that a good idea?
Yes, it will affect your credit. You are, as a co-signer, you are responsible for the loan as well. So, I mean, that depends on your personal situation. With your son, again, that's a good question for an originator to talk to with you about it. It would affect your credit, and you would be responsible for the payments if he doesn't make them. If he goes past due on payments, that'll negatively affect your credit score. So those are all things to consider depending on your specific scenario.
Great. Well, and you were talking about your own personal experience. I found my son's been out of college for 10 years, but I co-signed on his first apartment, and that actually popped on my credit report, which I was pretty surprised to see. So that's interesting. Okay, I think that's it for our questions right now. Again, participants, I'm going to encourage you to type your questions. You can certainly, if you don't want to type it in the everybody chat, you can send it just to me, Joan Pugh, and then no one else will see it. So feel free to do that as well. And we'll have another opportunity to ask Allison some questions. So with no further ado, let's keep going on.
Okay. So now we know the cost of a low credit score. The big question is, how do we improve those credit scores? The number one thing you can do to increase your credit score is pay your bills on time. Late payments really impact your credit score. And one way to not have a late payment is to set up automatic payments for all of your bills, loan payments, if possible. This way you don't have to worry about it. You always know it's on time. You know what date it's hitting your account. It's just really beneficial. You can also apply only for credit you need, and you want to keep your outstanding credit balances low. A good rule of thumb, keep balances below 30% of the credit limit on any account. If you can't pay off your credit card balance every month, keep it as low as possible. You will not increase your credit score any faster by carrying a balance than you would by paying off your balance each month. A lot of people try to play the game like, oh, well, I'll go up 5 points if I have a balance versus paying it off. And it really doesn't affect your score. If you can't pay it off, pay it off. If you can't, pay as much as you can. All right, next. Some other improvements, you can reduce your total debt and build up credit history. So another Wellness First Wednesday we had recently was with another First Financial employee, David Sitzer, and he focused on strategies for how to pay off your debt, the best approach, how to, try to have some extra money every month. I really recommend watching that one as well. And Joan will be providing a link to that at the end of the presentation. Next. So there are plenty of tools available, a lot of them free, to help you improve your credit score. Even with a poor credit score, it can go up. You can increase your score. There are tons of resources on First Financial's educational resource website page. There are links you can click to just gather more information. In a little bit, I'm going to be talking about Green Path Financial Counseling and Savvy Money's credit scores, because those are both great tools for understanding your credit and financial situation and how to improve it. Next. First Financial has a relationship with Green Path Financial Counseling, and this is an excellent resource if you're struggling with your debt and paying your bills on time. They offer free services like financial and debt counseling, free credit report review, mortgage delinquency counseling, student loans. On their website too, even if you feel like you don't need any of that, their website has tons of free webinars, budget worksheets, financial calculators, and short articles. I have talked with Green Pass counselors, and they are always resourceful and supportive. Please don't hesitate to reach out to them. It just never hurts to have another set of eyes look at your financial information and see if they can come up with any suggestions or ways to improve. So it never hurts, I feel like, to get more information. Next. All right, if you are a First Financial member, you need to be using this tool. If you aren't a member yet, this is one of the many smart reasons to become one. I'm talking about Savvy Money's credit score. Through online banking or mobile banking, whichever you prefer, you would register for Savvy Money, credit score, and then you have access to all of the following. A once daily refresh of your credit score. This is a soft pool and will not affect your credit. So with credit inquiries, you have soft pools and hard pools. And a hard pool means it like dings your credit. It goes on your credit report as a credit inquiry. But soft pools don't affect your credit at all. They aren't part of your credit history or credit report. So once daily, you get a refreshed credit score of where you stand right now that day. And it doesn't affect your credit report. You also get a credit report. You get a score analysis, grades for each score category that I talked about, the payment history, credit usage. You also get a list of recommended actions to increase your score. And I like this. There's a score simulator that shows how different credit activities affect your credit score. So, for example, I was thinking about increasing my credit card balance on one of my cards, and I could play around and see how that would work with all of my with my score and how it would affect my credit. Also, if you're thinking about looking for a new house or a new car, you can see how the different options play out according to your credit. Also, there are specific offers from First Financial based on your credit information. Next. So again, this is a really, really big tool to have at your fingertips, totally free if you're a member at First Financial. It is extremely beneficial to be able to keep track of what is happening to your credit and make sure your credit report is accurate. So to enroll in this, you're going to log on to mobile banking or online banking, and you'll see in that lower right-hand corner, there's like a box that says credit score and show my score. So you're just going to click on that and then enroll. Next. And once enrolled, and again, this doesn't cost any money, you'll see the dashboard. So this is the screen you see when you open it up. You click on credit score. Let's start to the left and make our way to the right. In the left column, you see grades in the different credit score categories. So we're going to cover that more in a minute. And the center screen, you see your current score, the click refresh score button for daily updates. And on the right side, you'll see offers from First Financial just for you. Next. So like I said, in that left-hand column, you can click on your different credit score categories, and it'll give you a grade, an analysis of why you received that grade, and specific actions you can do to improve that grade. For example, this person has an A in their payment history category, which is wonderful since this category has the greatest impact. So at the right, there are action steps you can take to continue to improve this category. I just want to take a moment to call attention to my favorite recommendation and one of the smartest things you can do to improve your bills. Put your installment loans on auto pay. Set up those auto payments. Next. Here's an example of a credit category grade that indicates some room for improvement. This person received a C in credit usage, probably due to too much credit card debt. Remember, you want to keep your balances below 30% of your total limits. And again, if you look to the right where it has actions, it gives you specific steps for how to improve it. So, if I was trying to improve my credit score, I would look at my grades and see what my lowest grade is. I would read why that I received that grade. And then I would just take 1-2 steps and try to do 2 of the action steps and try to do them, implement them. And then after you've gotten those 2 down, pick another one or pick another category. And so the frustrating thing about building your credit is it takes time, but these small steps you do have an effect over time. You just have to be patient, and it's not an instant reward. But with time, you can have an effect on your credit score. Next. So underneath your credit category grades, over to the left, that column, you see credit monitoring. So through credit monitoring, you can set up ways to receive alerts when your credit report changes, such as a new account, new inquiry, or an address change. Anything that affects your report will send notification. For example, I was thinking about buying a house, but I reached out to a couple lending institutions and was trying to get the different and see what interest rates were available to me. And so I had signed up for alerts through Savvy Money. And the day after I applied for a mortgage, I received a ding that there had been a new inquiry on my credit report, which is fine because I knew that was coming because they had pulled my credit. But if I hadn't expected that would have alerted me that something was going on with my credit that I wasn't controlling and had no notification of. So in a way, these credit monitoring alerts can serve as alerts of potential hacks or ID thefts. You can see if someone's opening an account under your name. It's just a very useful tool. And then when you are reviewing your credit report, if you notice any errors, right on Savvy Money's credit score, you can click that dispute report button, and then that'll take you right to the credit reporting company. And so you can dispute the report and try to get that corrected. Next. Another thing, I like free things. I like lots of information. So Savvy Money's credit score has tons of free resources. GreenPath had some good information, their website, and then this also has tons of information. Most of the frequently asked questions contain the facts I found for this presentation. And then there are also tons of financial blogs. And these are short, easy reads, 1 or 2 minutes. It might have 1 or 2 easy tips. They're up to date, they're relatable, they relate to our times. For example, I read a short blog about 5 quick, easy tips to improve your financial health. One was to pay bills as they arrive, rather than creating a pile of them to pay later. I have been doing this, for the bills that I can't set on automatic pay. So I had been doing that. Usually I just pile them up, hate looking at them, and then eventually deal with them once a month. But instead, this last month, I've been dealing with my bills as they come in. And honestly, it's way less stressful. I feel like I'm way more aware of my financial situation. And I don't have that anxiety of a pile of bills staring at me all month. So it was a 2-minute read, but I've gotten something pretty beneficial out of it. If you go to the next slide, you'll see the different types of blogs that are available, for different people in different life situations. If you're thinking of retiring, a home, how to teach financial wellness to your children, lots of easy, quick reads. Next. So again, that was Savvy Money that you can access through online banking and mobile banking. I really, really recommend it. So some other things to keep in mind as we're talking about credit scores. You don't want to waste money on companies that'll fix your credit. Every 30 days, a financial institution or company must report updates. So it would have to be fixed every 30 days. If you are really, again, Savvy Money is great to helping you understand your credit score better and maybe some possible steps you can make to improve it. But if you feel really overwhelmed by your debt and your negative in your low credit score, GreenPath Financial Wellness is also an excellent resource. It's free, they're helpful, they give you plenty of options. I highly recommend that too. And again, you want to track and review your credit. And something to think about, if you're questioning if certain credit actions affect your score, the more trades or more information you have on your credit report, the less impact and less severe some of your actions are. So if you don't have much credit history or credit information on your report, some of the actions you do will have a bigger impact. So I'm not saying go out and get 10 new credit cards, but again, you want to keep in balance your personal situation and perspective. If you don't have much credit history, any movement you make will have a greater impact. All right, next. Does closing a credit card improve my credit score? So these are just common questions people have. We'll have more questions in a minute. And I've already talked about this. No, closing credit cards may even lower your score. The open credit limit increases your limit and your balance to limit ratio. Does shopping around for loans hurt my credit score? Now, I found this interesting because I think this has changed recently. In the past, if you did shop around for different loans and you had numerous inquiries hit your credit report, it did affect your score, but now it doesn't. The Vantage score model uses a 14-day rolling window in which all credit inquiries are considered one. So this encourages you to shop for the best loan rates and conditions. For example, when I was trying to get interest rates for mortgages, I was free to apply to a couple different institutions just to see what the different rates would be. And it didn't affect my credit to have all of those inquiries. If I have no credit history, will my credit score be 0? No, you must have 6 months of credit usage to receive a score. Credit scores usually start at 600, but then either something positive or negative happens to either increase or decrease it. Next. All right, so that was a lot of information.
That was a lot of information. Yes, and we got our chat all fired up over here, so I've got some great questions for you. And again, participants, if you think of something now's the time to type it. So a person asked the group, so your credit score could be horrible and you can work it up?
Yes, definitely. Again, it's hard because I don't know your specific scenario, but a great starting point would be GreenPath financial counselors. They can give you specific steps based on your specific credit history. Another thing to look at is that Savvy Money credit score. They'll give you suggestions. The biggest way to improve your score from like today forward is just to make sure you pay everything on time. I guess that's the thing I could say without knowing your specific situation.
Right.
But yes, you can definitely increase it. You can definitely change it. It's a situation that can be changed.
Great. And just as an aside, if a person is going to take advantage of Savvy Money or GreenPath, do they need to be a member of First Financial?
For Savvy Money, yes. That is only available to First Financial members. For GreenPath, no. If you are a member of First Financial, you do receive additional benefits and some services there won't be a fee for some of the services, but anyone can call GreenPath. I encourage you to look at their website and you can still at least talk to the person without being a member and get information.
Great, thank you. Next question, when will the webinar be available on YouTube? Now I can answer that one.
Okay, good.
Yeah, so we need to process it, get it edited, clean it up a little bit, and then we post it. 2 weeks is about the right turnaround for that. If you would like some more specific information about that, I'm going to put my email in the chat, and I think I have. Feel free to reach out to me. I can send you a copy of the links that we post at the very end. I can notify you when it's up, when the video is up and available to you. Happy to do that. Let's see, the next question we have. Does it make your score better if you pay your bills twice in 1 month? So like halfway through the month and when it's due? I guess like bi-monthly or bi-weekly?
Right. I mean, there's a couple different ways. I'm not sure exactly what this person's asking, if they like pay double. I mean,
I think it's like if you owe BG&E $200 and you pay them $100 earlier in the month and $100 by the due date. And the person who asked this question, if I'm not right about that, please tell me that in the chat.
well, if that's the case, for BG&E bill, no, it won't affect your credit score. As long you just want to pay the whole bill by the due date.
Right.
If we're talking credit cards, then that starts to affect interest and principal. So, I mean, that won't affect your credit score. I mean, that can subtly influence your credit score because, you could possibly pay your credit card down quicker if you're putting more money in interest versus
right,
principal, or vice versa.
And I'll share a tip that I use personally. Our online banking system is phenomenal because you can set up these little sub accounts, like secondary savings accounts. And so when I know I have a car payment due on the last day of the month and I get paid twice, out of that first pay, I take half the car payment and I stash it. And then the second pay comes and then I have the second half of the payment. And then the money's there to pay the whole bill at one time out of my working money. I think everybody kind of has their own tricks about that, but that's one thing that I personally love about our online banking system.
And you can set up, what I love and what I've learned works really well for me is every pay I have an automatic amount that goes to savings. Like I don't even see it in my checking account. So,
right.
And it started off with $5, and then it's built through the years. But because if it's in my checking, I tend to spend it. So it's very beneficial to have it just automatically sent to my savings account. And that's been the
right.
biggest
David talked a lot about that in his presentation, that payroll deduction is an old-fashioned thing that's been around forever, but it's really our friend. It can really help. Absolutely. That's great. Thank you. Okay, here's another one. What constitutes a late credit payment? 5 days, 10 days, 30 days, question mark.
That's an excellent question. For certain companies, it will show on your credit report if you are 30 days past due, 60 days past due, and 90 days past due. So I would avoid that. Some institutions do give you a grace period. To best answer that question, I would reach out to all of the companies you pay bills to or loan payments to and ask them that, what constitutes a late payment, and see what they say. Because again, it depends on the specific company. But again, just try to get those bills paid on time.
Right. And when you say paid on time, you don't mean postmarked on time. You mean processed at the lender by the due date, right?
Right. Yes. And, nowadays with mail delays, if you can pay, I know it's challenging for some people, but if you can pay online, I think it's very beneficial because the payment has been sent and you can, when it's arriving. So. Right.
Well, and this last question, I think you've already addressed. It was, can I use Savvy Money if I'm not a member? I think you shared that already. But that's a great reason to join, right?
Yes, you do have to be a member. What?
That's a great reason to join First Financial.
It is. It is. It's so much information at your fingertips. It's a great benefit. And also, I can't stress enough that it really is doable to increase your credit score. And Savvy Money is probably the strongest tool you can have to help with that. So, and even if not, our website does have tons of useful links. just kind of pick one small goal and start working on it and go from there.
Absolutely. Absolutely. Okay, I'm going to check the chat one more time and then I'm going to, oh, here we are. Thank you. Okay, so the question is, so when you turn 18 and your credit score isn't a thing yet, it won't be zero?
No, it'll be, we've seen that sometimes in the lending department. It's just empty. It's like an empty credit report. There's not much credit history, obviously. It starts at 600, and then depending on the first few actions, it can either increase or decrease.
Great. Okay, this is another great question. How can those who just become adults get credit? So I guess it'd be like 18, 19-year-olds to get them on the right foot with their credit.
First Financial offers a, I think if you're younger than 18, you can get credit cards, and then, just apply a credit card is a great way to start. Your phone, instead of having your parents pay for your phone, you can start your own phone contract. That and make those payments on time. That'll build your credit. So there are a couple options out there.
Great. Right. I think with my own children, back when they were that age, they applied in their own name and I co-signed to make that work because they didn't have a job. And it, like you said, if you start out on the right foot from the very beginning and make those payments on time, it really helps build your credit.
And it's hard. I mean, because you don't know sometimes at that age what you're doing, and you get handed a credit card, that you applied for, but you don't understand you have to pay back with interest. So, if you can just instill on people the importance of making your payments on time, that'll really help.
Well, I'm hoping everybody saw the resources that I put in the chat. Again, here's some of our other resources. You can go ahead and share those, Allison. I'm sorry.
Oh, there's just the Experian website, which has tons of information about credit scores, the Green Path website, which I can't stress enough. If you have any concern about increasing your credit score or paying off debt, this is an excellent way to get personal information based on your credit report. They'll do a soft pull, so it won't affect your credit score. And they'll look at your information, ask you about bills, and they'll just do a good analysis of your situation. And then if you're a member, I think one of the best tools we have is Savvy Money's credit score.
Great. All right, I'm going to double check that one more time. I am putting my email in the chat. If you, I'm not a financial counselor. I can't help you with that part, but I'm more than happy to send out all of the resources that we had today. So feel free to reach out to me. Allison, I want to thank you so much for your time and your expertise in sharing this information with us. It's just been really, really informative, and I think we've all really learned a lot. So thank you very, very much for being with us today.
Great. Thanks for having me. Happy to be here and share the information.
Great. And if everybody remembers, we're going to be sending out that survey. Please fill it out and return it. You'll be entered in that raffle. And I hope you join us next time. Thanks for attending.